Today we're looking at the US banks, more specifically Bank of America, JP Morgan and Wells Fargo. We're looking at the macro environment. We're seeing a strong US consumer, making the inflation a bit more stickier, but also playing into stronger credit quality on the bank side so far. Credit cards are normalizing, so meaning that there's still some growth, but also some deterioration in credit quality, but still just normalizing to historic averages. We're seeing some hints of weakness starting to show, although not necessarily at material levels yet, especially at these three large banks. Weaknesses specifically more coming in your corporate real estate and then some small business. And then earnings front, they've all benefited from the rising interest rates, benefiting on a higher net interest margins, therefore translating in higher net interest income. On the valuation front, all three banks that we're looking at today are at their historic lows on a valuation front, and therefore we see some slowdown and credit deterioration already priced in. We have a buy recommendation on all three banks, and apart from the lower valuations, we also looked at our markets look 1 year ahead on earnings, and most expectations are that mid-2024 earnings will reach a bottom as the net interest margins decline and the credit deteriorates, and then from there on it starts to improve. So if we're looking at 1 year ahead, it should start to improve these expectations onwards. Our preference is firstly Bank of America due to higher quality and lower valuation multiples. Secondly, JP Morgan is our long-term favorite bank to hold. We see it as a large bank and being an industry consolidator over the long term, and also a higher quality bank in its profitability and how it's able to position itself throughout the cycle. What would change our mind is if there's a worse outcome in the economic environment, so a very hard landing and rapid decline in credit quality, and if there's also material further interest rate hikes, that would go against our view.
Thank you very much for joining us today.